Welcome, welcome one and all. We welcome you to the technology and the changing future of investing. And first and foremost, we've got to big a thank you to our sponsor of today. You just saw a short video about them. It is, of course, Broadridge who brings us this today. I'm myself and Caroline Hyde. I'm fortunate enough to be a TV anchor for Bloomberg. And I urge you, of course, to get stuck into some of the extra materials that you find through this virtual conference. Get into the handouts tab in the Q&A window and you'll be able to read more about Broadridge and, in fact, how they're basically taking the pulse of financial services and the people that lead them at this very moment. Go into the Broadridge Next Gen Technology Pulse Survey, get a feeling for where financial companies are going, how they're embracing technology amid this, I mean, we use the word too much, unprecedented time amid the pandemic. And you can hear about what they're doing in terms of AI, blockchain, the cloud, and further and foremost. Now, we also know we're about to talk about technology. And what does that mean? Well, cue technological issues, of course. Sometimes there might be an issue with this virtual conferencing kind of malarkey, and we want to ensure that it's smooth for you. So please be ensured that if you experience any difficulty at all during the broadcast, please just refresh your browser. We find that helps the most. Also, get involved. Use your technology at your fingertips. Type out questions, send them to us, get involved in the Q&A yourself. Tell us who you are, and indeed, we'll give you a shout out, your name, your location, and indeed your question for our panelists. And follow us on social media. Of course, we're there. We're at Bloomberg Live. Use the hashtag the future of. Now, let's get first to our key panel that we're about to kick off with. Technology and the changing future of investing. We're going to go deep into the future of finance, engaging with the top minds in terms of how they're using technology to drive forward, hopefully some silver linings to these clouds amid the pandemic. Tim Gokey is with us, of course, the CEO of Broadridge. We thank you, sir, of course, being the sponsor of this event. And Tom Naratil, he is the head of Global Wealth Management and president of UBS Americas for UBS. Gentlemen, welcome.
Thank you.
Now, we talk too much probably about the unprecedented time in which we now live, and there have been significant challenges. This is first and foremost a health crisis. It's also now an economic crisis, and it is a moment of reckoning when it comes to social injustice. But amid these dark clouds of COVID, there are these silver linings. I mean, Tim, you've seen uptake in some of your solutions go through the roof, people needing the sort of platforms and technological advances that you offer. Tom, I know that you've seen profits move up double digits because people need clarity, advice when it comes to what they do with their wealth and going forward. So talk to me first, Tim, if you can, about what is one of the key lesson you think you've learned coming from March to now amid this pandemic that you faced within your business?
Yes, absolutely. And Carolyn, thank you very much for having us. Great to be here with you, and Tom, also with you. I think that we're really seeing the pandemic accelerating changes that were already underway. Prior to the pandemic, our clients were already seeing their business models needing to evolve, needing to change. And next generation technologies like AI, blockchain, cloud, and digital that you referred to, that we call the ABCDs, are part of that change. And post-pandemic, that is happening even faster. We see that in our client conversations. The biggest things we're hearing is clients seeking next generation mutualization, resiliency, and digital transformation. To get a sense of that beyond our own experience, we surveyed 500 C-suite executives. I think you referred to that, from global financial institutions. 70% said that digitization is making the biggest difference for them. Over half are planning to accelerate their next generation technology investments. And 72% said that leveraging third-party technology is more important than ever. So to address these needs, we are significantly upping our investment in our own people, products, and platforms across investing, governance, and communications. We have about a dozen major launches over the next 24 months, and the core theme of these is to really be the on-ramp to next generation technology for our clients. And we do that by helping them with industry solutions for critical but non-differentiating functions that really let them share talent and cost of innovation so they can focus their own scarce resources on what makes them truly unique.
And making themselves truly unique. Talk to us about how you've managed to do that at UBS, Tom. How are you I know you work very closely with Broadridge, and you've been really tackling the lack of certainty among your clients right now, what have you seen as the key change in this moment of the pandemic in the way people use your wealth management services?
I like the way that Tim talked about acceleration of change, because that really is what we've seen. But it's around this desire, certainly in a crisis like this in a wealth management business. There's a desire on the part of our clients for engagement. They want the contact. They want to speak with their advisor more frequently than they have in the past, and they're using new tools to be able to do that. So the advance that we've seen in terms of utilization of digital technology and the way that they engage with us, whether it's engaging with their advisor in terms of a conversation, let's say like this, over video, whether it's the way they engage with content like research, whether it's the way that they utilize digital tools to be able to handle some of the transactional activity that they have in terms of mobile check deposits and remote deposit capture, for example. All the utilization of those tools have spiked up during this crisis. And the way we frame it, we think that in a short period of 2 to 5 months, we probably saw 2 to 5 years of increased technology adoption, and that puts us in a great place to be able to serve our clients even better going forward.
A great place, because I hear time and time again people feel that technology is going to be the end of jobs. We're going to do ourselves out of roles. I mean, I've seen augmented reality versions of news presenters, for example. I hope they're not too good quite yet, but the future's coming. Tom, when people say to you, look, technology is going to be the end of wealth management, what do you say?
Uh, Definitely not. I think that's I've been doing this for 37 years, and I've heard that throughout my entire career about technology will replace the advisor. Um, and you might draw that conclusion if you don't understand the business that you're actually in. We're in the business in wealth management of the product that we sell is selling a relationship with an advisor. So technology is what enables a relationship with a client to become more rich, to become more vibrant, to become easier for the client to access that advisor and the tools and the content that we have available to them. So I would say for all the financial advisors out there, embrace technology. It's what's going to make your relationship with your client even more rich.
Tim, where has been most embraced amid what you're currently offering, particularly within where you work with UBS, for example?
Yeah, and I do think that we're not seeing any slowdown in anything we're doing with the clients, and that acceleration we're seeing really. We saw in our last quarter record newly contracted engagements, and we're seeing really good productivity in terms of all the tech builds and transformation that we're working with clients. We are seeing a lot of co-creation with clients where they see a new problem and they want to share the burden of change, and the reasons for that can be varied. They may not have all the IP, the initial cost may be high, they may want to share the ongoing burden of keeping their solution up to date. And as you said, a great example of that is the work that we're doing with UBS. We are working together to create a next generation mutualized wealth platform that will digitize client, advisor, and back office experiences. And it's all built on a modern multi-currency platform with full market connectivity and a very open data layer that enables a whole set of applications on top, some of which will be provided by us, some by UBS, some by third parties. And so for UBS, it includes a new advisor workstation, a better advisory experience, full automation from the advisor and branch through to the back office. But the key point of this is the flexibility of the new architecture, which wasn't available even 5 years ago. There are lots of models in wealth management. So no platform is going to serve everyone well, but by creating a really open core platform, leveraging an enterprise services integration layer, which is a mouthful in itself, it really allows for very seamless tailoring to different wealth management business models.
Tim, it's interesting that you say the platform that you're currently developing wasn't available 5 years ago. And just previously, you said that based in the last 2 to 5 months, you've seen the acceleration of technology and adoption of technology accelerate by 2 to 5 years. How have you kept up with that sort of pace of change? And how do you ensure that you're continuing to evolve and meet the mark with that acceleration for needs? How sustainable is that trend that we're seeing post-pandemic?
Well, I do think that in terms of that acceleration, I think in many cases it is adoption of existing tools versus just pure creation of new tools, because you can't create new tools that fast. Turning to really sort of almost a different area, we think about the governance, and you and I, Carolyn, have talked about this before. We had focused on virtual shareholder meetings. We created a product to do that 10 years ago. We gradually got it up to 300 annual shareholder meetings last year. And this year, we have done more than 5 times that many, and that continues. So that's an example of an existing tool that is then accelerated. And of course, we talked about the new things we're introducing.
Tom, when you said about the new adoption, the way in which people have been wanting, your clients have been wanting to interact that much more with their advisors, do you think that's sticky? Do you think post-pandemic, and we wish it away now, but of course we're probably living with it until mid-2021, but will the ways in which you now interact with your clients remain after the pandemic?
Yeah, absolutely. We definitely believe that, Caroline, because there's a huge demand for content, for understanding. And if we think about our clients are spending more of their days sitting in front of a screen, doing either their work, communicating with their families. And as a result, they're more engaged with digital content than they ever have before. And we certainly see that continuing on a sustainable basis, because it comes down to the client doing what's convenient for them. And ultimately, if we're figuring out how to make it very convenient, they are going to continue the utilization. I would like to maybe turn that a little bit away from the client and think about the advisors, because as Tim was talking about all the work that we're doing together on the wealth management utility with Broadridge, I think it's addressing so many different use cases for us in terms of things that are out there, whether it's mutualization of regulatory spend, whether it's looking at replacing core back office system to ensure that you've got the cleanest data to use in data science going forward, whether it's thinking about how we use AI to help to make our people more effective and more efficient at what they do and more relevant to the clients that they have. When we think about what is inevitably going to be a consequence of certainly Fed policy as a result of the pandemic, the Fed keeping interest rates lower for longer makes it a lot harder for us, for those of us who are in net interest income businesses. So as a result, we're forced to think about the operating cost side of things and how we can become more efficient at what we do. And that's certainly what Tim and his team are working to build for us in the industry through the wealth management utility.
Yeah, Tim, because you've got such a bird's eye perspective of how to ensure this is good not only for the individual client, but also can be broadened out to an industry-wide solution. What are people asking for you at the moment most? Is it about ensuring that they have more time? Is it about cost efficiency? What is it that your clients are needing to ensure that they can tackle this pandemic head on?
I think they are really keying in on what Tom talked about in terms of this theme of digitization. And there are so many different aspects to that. It's how the firm works, it's how the advisor works, it's how we interact with the client. And I think all providers are really seeking new ways to sort of lean into that, and in terms of how we work and how we engage with clients. And we're investing on both sides of those. I want to focus for a second on that engaging with clients. And there is an interesting one, because a lot of people are coming to us around this topic, which is the truth of the matter is that firms invest tremendously in a whole array of outbound communications, many of which are paper-based today. And digitizing those communications is clearly the way forward. This is one where there's a great opportunity to have it both ways, to increase client engagement and to save money at the same time. And to make this practical, we think institutions can take a 3-pronged approach, which is start by modernizing, integrating their digital communications infrastructure. Too many firms have multiple archiving, composition, preference management, e-delivery solutions, and modernizing those into a single cloud-based platform can save money, but more important, enable a much more integrated conversation with your client. Second, there is a whole piece around optimizing the flow of paper, and there are a variety of techniques to do that can produce some real savings. And then third and most important is to further drive down paper, but drive up engagement by offering truly next generation experience where the firm can project visual, clickable content directly into their client's email that can create a truly digital experience, a modern experience that can lead directly to action. And I think this is the kind of thing that clients are coming to expect, and that over time we think will be table stakes.
Tom, can you give us some examples of how that's worked in the real time for you? I'm sure there's ways in which your wealth managers are able to take cues from social media to be able to ensure that they're keeping up with certain life events. How are you seeing this being used in practical terms?
Well, let me think about a really basic client use case that we're working on right now, and I'm sure we've all experienced this. There are multiple platforms that different companies use as their corporate solution for video conferencing or videoing in. And I know, for each one of us, we get a list of instructions for each call that we have to think about how are we getting in or to this particular version or not. So one of the things that we found is how can we make that easy for clients based on what they've told us. We're going to build that video application right into our regular client app that they would use for bill payment, remote deposit capture, to check on their accounts. Why? Because it makes it easier for them. And I think this concept of my advisor is always in my device that I'm carrying around with me. It's the omnipresent advisor, always there to help me and my family. That's just really a fantastic use case for us to develop a solution for the client base.
And Tom, you've talked not just about the client interaction side and also how this helps your advisors, but I mean, you're a man who's not just head of wealth management, but you are head of UBS Americas. How are you seeing this sort of technology that Tim speaks so eloquently about the ABCs, the AI, the blockchain, the cloud? How are you seeing that impact other parts of UBS's business?
Well, it's the ongoing discussion in every single one of our businesses is it's not about where are we developing technology, it's about how much technology we're developing and can we actually handle all the change that we're putting through in one time. If I think about our investment banking team, some of the things that we're utilizing in our wealth management applications, in the development of the workstation on the AI pieces, actually come from the technology development that our evidence lab team did and our research team did in the investment bank, in terms of whether it's smart emailing, smart scheduling, smart calling to clients to make sure you're making relevant calls to those clients. So in a way, doing the data mining on where did your clients spend a lot of time, where were they interested, and how do you make sure that you don't waste their time with things that they're not interested in, and that you're very targeted in terms of what you direct to them. Second, obviously, I think whether you look at asset management or investment banking, it really is going to be about the efficiencies and the efficacy of your order handling, your order routing, your order execution capabilities, and that's going to continue to be the arms race in investment banking as they serve their asset management clients. And maybe the third piece, and I think we'll see this certainly in the asset and wealth management businesses, is going to be around technology that can help to deliver both education, screening, performance, and validation around the whole topic of sustainable investing. We as an industry have to make sure it's just not a marketing buzzword, that we're able to deliver exactly what we tell clients that we're doing, and that we can report on that and show them exactly what we're doing in a very transparent way. And I think that the technology developments that take that from what is a pretty simplistic approach for the industry as a whole today into something that's a lot more meaningful, relevant, and effective for clients in the future is probably going to be a very big development for asset and wealth management going forward.
That almost has been one of the silver linings to a certain extent of the investment community of this dark cloud of a pandemic. We look to the E, the S in particular, the social and the sustainable part of investing. Tim, is this something you're seeing reflected, the demands of technology? How do you help with the measurement? How do you help with across the capital markets as well, not just in wealth management?
Yeah, I think just a couple of examples of how these technologies are affecting the other aspects, capital markets, asset management. Um, First, AI, very big thing. Tom mentioned it. And, one we're very excited about is applying AI to fixed income. We're going to hear about that in the second half. But the liquidity in fixed income, it's a huge issue. The number of CUSIPs is almost infinite, and the future of fixed income trading is clearly using AI to find the natural counterparties for a given trade, and then to aggregate demand so that electronic trading can go beyond the small lot sizes where it's focused today. And broker dealers need to be in the center of that. We're working with more than 50 dealers and buy-side participants to really reimagine this, and that's, I think, something we're very excited about. Another one, applying digital ledger technology to repurchase agreements. Repos are the cornerstone of how capital markets players finance themselves, with literally trillions of dollars settling every day. And a lot of that activity is actually between entities within the same institution. And with DLT, securities can be mobilized to the custodian, tokenized, and move between entities with virtually no cost or risk. So I think that's just a couple of examples of how applying these technologies can really make a difference in capital markets and investment management. I think another area is global, and when we think about the unique challenges faced by global institutions, typically the technology has developed by asset class, by region, leaving them with a very complex operating model, multiple books and records. That creates additional risk. It traps capital. And so the idea of bringing that together in one global clearance settlement system, one global asset servicing platform, that can really make a big difference for the global firms, and certainly something that we're seeing as well.
Tim, you put it so eloquently, finally, how blockchain is being put to work. It's something we talk about so much, but actually hear how it's effectively being used in something as newsworthy as the repo market, and all the issues that we saw at the end of 2019 is really focused and phenomenal. And also, Tim, to your perspective there on globalization, sort of talking about needing to break down the barriers. We talk about 2020 almost as a year where we saw barriers form between country and country, people becoming more inwardly focused rather than more global. Does that worry you in the longer term, or do you really feel the way the niche your technology is driving, that we are just becoming ever more globalized, and certainly that's what's being asked of you?
Well, that is an interesting question. Certainly, there's a lot of talk these days, particularly about decoupling with China. I don't think that will have as big impact on capital markets because they haven't been as big a presence in that. I think really the questions here will be around what happens in the Western world with the U.S., with Brexit, with the EU, and can those really continue to integrate? Really, as you know, the trend the past 10 years has been an integration trend with all the new regulation in the EU that has brought those markets much more closely together. There's some very important regulation that has occurred in the past few years to increase shareholder rights, the Shareholder Rights Directive, and so right now I'd say the main momentum is still probably flowing in the direction, leftover momentum of integration from things that have happened in the past, and we'll just see. I think what happens in this election will make a big difference, and we'll see what happens in the next 18 months.
Tom, your perspective of how technology has helped UBS become a more global player. You sit as head of Americas, UBS, of course, headquartered over in Switzerland, making big inroads into Asia as well. How has technology been a force for combining and for becoming a stronger global entity?
Well, certainly from the first way that technology has been critically important to us in this crisis has been, all the work that we put in, over years on developing, virtual desktoping, prepared us, which originally the work we were doing was how can we create a more flexible environment for our workforce. But the numbers that we were thinking about were a fraction of what we saw during the crisis. So shifting from 5% work from home to 95% work from home, and the ability to do that seamlessly, clearly, was one big advantage, and something that by thinking about moving to the cloud and all the other changes that we made in terms of our infrastructure clearly played off. As we think about this going forward and the global nature, I'm going to come back to the content and the ability to deliver for our clients. If I think in our wealth management business, where we have a global CIO team that services our client base and our 2.6 trillion in assets that we manage around the globe. Well, clients are waking up in the morning in Asia and then watching what happens in Europe and then taking a look at what's happening in North America, having a team of people who can be seamlessly connected with our advisors and clients and able to deliver content in real time. The pop-up live streaming that we've been doing for market events, for events related to COVID, for events related, hopefully going forward on vaccine development. That delivery of content actually is moving us in a way a bit more like your industry in terms of media, in terms of what we need to do, and in terms of what we need to do for clients. So I think tremendous changes happening in the industry, and clearly bringing technology and financial services closer together is what is going to help us to be able to deliver more capably on a global basis, global content, but delivered locally and delivered personally.
We've got just a few minutes left, so if there are any more questions from the audience, please do send them in, because I'm sure there's several for Tim and Tom here. But Tim, you're a man who clearly looks around corners for us. You're a man who's already bringing digital ledgers to bear within finance. You're already helping bond trading with LTX. Look around the next corner for us, if you can. I mean, you're already saying 2 to 5 years out, there's been an acceleration in adoption of the technology that you've already created. Where excites you for what's currently being R&D'd on at the moment?
Well, I think I'll just do near term and long term. Near term, I think the impact of cloud is profound, and I'm not sure if that's looking around the corner anymore, but it's much more than an infrastructure play. It's about modernization. It's about a whole core suite of software based on microservices, DevOps for continuous deployment, improved security. And moving there is a huge task, because often deep factoring is required. But it's gone from clients asking for no cloud to cloud ready to only cloud. And this can be an area where we're leveraging a modern SaaS service can take some of that work away. And we look at the big technology estate that large organizations have to modernize. SaaS offerings can be an on-ramp for parts of that and simplify that task. So that's sort of on the near term. I think out a little bit further, I think that AI will have tremendous impact. I think that every application will have AI embedded as a key enabler. And to be ready for that, firms need clean, complete, and open data. And I think in some sense, that's where folks should focus today in order to be ready for tomorrow. And I think the next panel we're talking about applying AI will be a great example of that.
Yeah, I love it. You're doing my job for me, teasing ahead, Tim. We have got a couple of questions just coming in, so I'll point them towards Tom's direction, asking what new strategies is UBS using to improve advisor adoption of the technology as it develops? Have you had any reticence at all, or have they taken it with open arms?
So what we're looking at, and this has been a significant focus of what Tim and I and the team have been focused on in terms of the development of the Wealth Management Americas platform and the utility. It has been how do we get adoption, and we're working with adult learning experts on how do we make relevant education. And I think probably the coolest thing we're doing is what we're calling the development of the sandbox, which is the pre-live version of the technology. So our advisors, our client service associates, and our other team members are going to be able to play around and not in the real world be able to make mistakes, but you learn from making those mistakes. So I think the focus on how you utilize learning and a fun way to learn is going to be critical to the technology adoption.
And last one for you, Tim. What do you want to leave with the audience right now in terms of next steps? What are you inherently an optimist about where 2020, where 2021 go?
I am an optimist because, as Tom said, this has been such an acceleration of trends that were already there. It's that notion of 5 years of progress in 5 months, and so I think it is making these investments in technology and in innovation even more relevant. As I said before, the increases in demand that we're seeing are high, and so I think what we're seeing too is real separation happening in the economy overall, with winners and losers being rewarded and punished. And so I do think it's the time to invest, not so much for the next 12 months, but for the time after that. We're certainly investing ourselves and also investing to assist our clients to be really on the right side of that accelerating curve.